Many people consider their largest asset to be their home, but quite often, your largest asset is really your ability to earn an income. Imagine suddenly having no income. How would your lifestyle change if you couldn't work tomorrow? How would it affect your family? Many people don't think about a life-changing event happening to them. However, the risk of becoming disabled is far greater than you might think. As you age, the risk of becoming disabled changes. But what if you could reduce that risk and design a program to fit your needs? What if it only cost you a portion of your weekly income to protect the rest of your annual income? This is the promise of income protection insurance. Income protection insurance is designed to replace your income when you're too sick or injured to work. Let's go back to your home. You have insurance on your home. This year, just 1 in 1,200 homes will burn down. You also have insurance on your car, but the chances of you destroying your car in a catastrophic crash are only 1 in 240. You stand a much greater chance of being disabled and unable to work, 1 in 5. As you age, the risk of becoming disabled increases. Let's say you're 40 years old and looking forward to retiring at 65. During the next 25 years, you have a 48% chance of suffering a disability lasting longer than 90 days. That's almost 1 of every 2 working Canadians. If you're disabled longer than 90 days, there's an almost 60% chance that you will remain disabled longer than 5 years. And if you're no longer able to work, where will your income come from? Your savings, RSPs, a line of credit? How long could you financially survive? Months? Weeks? Days? As you can see, your income is by far your greatest asset. You can protect that asset and ensure you and your family's future with income protection insurance. So, where do you start? There are 2 key questions to ask yourself. The first one is, how much money will you and your family need to maintain your current lifestyle? For example, let's say you're 40 years old and are earning $50,000. By age 65, if your income were to increase by just 3% per year, an average inflation adjustment, you would earn about $1.8 million over that 25-year period. This is a very large sum of money you would need to replace to maintain your current lifestyle and build your retirement fund. If you have children, it could be used to start their education. You'd use this income to go on vacations, to visit the places you've always dreamt of. The second question is, where is this money going to come from? Let's look at some potential sources of income. If you saved 5% of your income each year for 10 years, it would only take 6 months of income loss to eliminate your entire savings. What bank would you be able to borrow from? Would they consider a contract that would allow you to borrow when you're unable to work because of a disability? Will you be able to pay your bills and maintain your lifestyle on one spouse's income? Would you be able to continue to save for your children's education or your retirement? You may be able to sell assets, but what if market conditions weren't favorable? Would you be able to recover from this kind of a loss? The most logical source of income during a period of disability is an income replacement plan, if you qualify. It's a secure source of money in the event of disability, and it can fund financial liabilities that occur due to long-term injury or sickness. The cost is extremely affordable. Typically, with a portion of your weekly income, you can fund the remainder of your annual income. If you don't have an income protection plan, there's never been a better time to start one. Contact your advisor today and have an income protection plan tailored to your specific needs.